So that was the first leg of the conversation. And for me, the biggest takeaway of that conversation is the fact that valuation is attractive still. There is opportunity in the small cap space. Liquidity is a bit of an issue, which is causing a bit of a constraint for small cap fund managers. But what should you as the investor do? Since there is opportunity and you would like to play the small cap space, is the small cap fund the best option, or are there other opportunities available for you to take? Let's take this conversation forward. Joining me now is Harshvardhan Roongta, who is the co-founder of Roongta Securities, as well as Mohit Gang, the Chief Executive Officer of Moneyfront. Gentlemen, thank you so much for taking the time, and pleasure speaking with you as always. I've set the context at this point. Significant money flowing into small cap and mid cap, but we're talking about the small cap funds in particular. Two large small cap schemes deciding to pause inflows at this juncture, which is indicative of where we stand right now. I'll come to you first on this, and I want your view on this. Harsh, why do you think that so much money is flowing to small caps right
now? Alex, it's a proven past record that in a sustained bull run, when you see the return, when markets have given you positive returns, and particularly if you look at the returns that a small cap category has generated. So very quickly in the last 1 year, the small cap funds have on an average given about a 30% kind of a return. If you look at say 3 years, it's about 35 to 40% kind of annualized return. And if you look at a 5 year, it's about 20% kind of a return that an investor is seeing on screen. Okay, so when he goes onto any online platform, the kind of returns that you see in the past, these are the kind of returns that you see. Now, invariably, the investor will get a little lured into this and say that I also want to invest in a small cap, because assuming this is what the returns I will generate in the future as well, which is not the right attitude. And in sustained bull periods, I mean, the inflows that come into small caps, mid caps is obviously going to be more than large caps, because you will see exponential returns. So this essentially becomes a draw for layman investors who neglect all the principles of investing, which is asset allocation, which is risk profiling. They leave all that aside, simply chase returns, and purely based on what the schemes or the category has done in the past. So, which is a very, very dangerous sign for a portfolio. And I'm happy that we're having this conversation. So probably a retail layman investor will understand the nuances of small cap and probably will plan out better.
Absolutely. Because the drawdowns are also quite significant. It depends on when in the cycle you get in. And we've discussed this as well, right? If you look at 2008 onwards, Mohit, there are 3-4 year cycles in which this play out. And if that is what is playing out right now as well, we seem to be in the middle of the cycle. So therefore, there is potential upside from this point. At this juncture, why do you think these two large fund managers have decided to pause inflows? It's primarily because of liquidity, right?
Oh yeah, Alex, perfectly. I think liquidity is one of the biggest criterias and the foremost things in mind of a fund manager who's running a small cap team. Look, I'll just take a small example, and these two funds have actually taken a very proactive call. The Nippon has taken it at 32,000 crores of assets, and Tata has taken it at almost like 5,000 crores of assets, which is a different thing. But if you just analyze and scrutinize the portfolios, and let's take Nippon for an example, illustration out here. The top holding of Nippon small cap fund today is a company called Tube Investments, right? Nippon holds almost 3.5% in that company, which is roughly worth around 900 odd crores kind of value, which Nippon holds in its scheme, and that's the largest holding in Nippon small cap, right? Can you take a guess, Alex, as to how many, what's the trading volume on the stock today? In today's trade, and I've just seen it like 5 minutes back, today's trade, the stock has traded 60,000 shares. That's about it. 60,000 shares, and then Nippon holds 33 lakhs of shares of that particular company. Now, imagine a scenario when Nippon might have to liquidate this for multiple reasons, for redemption pressures, for market corrections, for something going wrong with the company. If they were to go and sell this in the open market, they will not have a single buyer available. 50,000 is not a volume which you can trade at. The same thing goes, if you see the top 10 holdings, right, and the 10th company is a company called Elentes back. The volume there is 800 shares, Alex. 800 shares have got traded today, right? And Nippon holds almost 350 crores of that company. So imagine a liquidity drawdown scenario when they were to go for redemptions and everything. It's nearly impossible for a fund manager. I'm talking of the top 10 holdings. Now, imagine this going down to the 50th or the 60th or the 70th company in the portfolio. There is absolutely zilch liquidity, right? Yeah. So that's why the pressure is humongous. And that's why the fund managers have to take a proactive call to stop fresh flows in the fund so that they can manage to label nature of being a small cap and invest and also come out when time calls for it.
Okay, fair point. And 170 plus was the size of the portfolio last I checked, Nippon, right? Which is humongous. Of course, the other small cap funds have a smaller holding. Harsh, the question to you then is, given the nature of the small cap space that we have here in India, one would assume that this challenge to deploy funds is going to continue. So therefore, from that perspective, is the small cap fund the best way to deploy into the small cap space?
Well, not really. So, Alex, let's understand. If I'm a small cap fund manager, okay, so my limitations are what? So I get money in my scheme in a small cap, mandating me to invest a minimum of 65% in the small cap category. I cannot do anything on that count. I have to deploy 65%. And the balance 35%, I have the liberty to pick across large cap, mid cap, or any other thing. Now the question is, even if I don't have good investment ideas, my mandate is, and my investor has given me the mandate to invest only into small caps. So I have to pick something. I cannot be in cash for long, right? I mean, I can't take cash holdings for 10 to 20% of my AUM continuously. So what will I do? I will just have to randomly pick something or the other just for the fact that I have to invest. Now, if I am a flexi cap fund manager or if I am a large cap fund manager, my scheme mandate allows me, in a large cap fund, allows me to invest 20% of my corpus, of my AUM, into any other segment other than large cap. So I can take a mid cap, I can take a small cap. Now here, if I find something interesting, so hypothetically, there is a very good company in the small cap category, and I like that company, and I believe there is growth potential, I will have flexibility to invest 20%, up to 20% into any other segment other than large cap. So then I can cherry pick the good companies that I want to and include it in my portfolio. In a multi-cap, I have to deploy 25% mandatory, and then the rest I can do whatever I want. I'm in large cap, mid cap, and small cap 25%. The balance 25% can go anywhere. So if I am, looking to invest, now I come back as an investor. Now I'm an investor. Do I want my fund manager to mandatorily pick into small cap category, or do I want him to pick selectively wherever there is growth potential? That's a call that an investor needs to take. My view would be a layman investor is better off to allocate towards a multi-cap fund. If you you want a definitive allocation of at least 25%, but giving a full mandate in a pure small cap fund may be very restrictive for a fund manager, and you might land up just buying things because you have to.
Fair point. I want to take that point a little forward though. And Mohit, this question is to you then. For somebody that understands the small cap space and is looking for that diversification in their portfolio, the argument, and I take Harsh's point, he's talking about multi-cap funds where you also have a threshold, minimum threshold where you need to invest. But a flexi cap fund traditionally has been ostensibly a large cap fund. There's not much of an allocation towards small cap. So for somebody who understands the need for a small cap allocation in a portfolio overall, what is the option here?
Perfectly, Alex. I think FlexiCap, to my mind, honestly, is not the right option, because you go across the board and check any FlexiCap fund, they rarely have small caps. In fact, they don't even take proper mid-cap allocations. They're predominantly running a large cap strategy. It's like 65 to 75% large caps in the portfolio. So in all practical purposes, it's a pseudo large cap kind of a theme. When you want a small cap, by virtue of your financial goals being very, very long term, by virtue of your liquidity scenario being fairly good, or by virtue of you having aggressive risk profile, or for whatever reasons you're comfortable, you are a pro-seasoned investor, then I think a small cap, mid cap allocation in a portfolio is must. To what extent and magnitude, I think that has to be jointly discussed and debated with your financial advisor and the client sitting on the same table. But to my mind, a 10 to 20% kind of an allocation for long-term portfolios is warranted in small cap. Now, you obviously have compulsions. Those schemes have closed lump sum, but SIPs and STPs continue to follow. I think people should continue their SIPs and STPs into these categories. Multi-cap can be a good replacement. With 25% compulsory small cap addition, I think that gives you a foot in the door. kind of a thing. And last thing, I think if you find those being closed in active funds, I think passive is always an option. To honestly speaking, I think that small cap index is you won't go wrong in that for a 10-15 year period. But yeah, in past you can debate that the active funds have delivered much more returns on the small cap category than the passive ones. But as markets mature, as you move forward in 10-year, 15-year kind of a cycle, I think a passive also will warrant some addition in your portfolio. So I think those are good ways to incorporate small cap in your portfolio.
Just to clarify, you're talking about 10 to 20% of only equity portfolio, right?
Yes, absolutely. Only equity portfolio.
Okay, just to close this out then, we've kind of established the boundaries of this conversation, but to the most important point, which is what would you do right now, assuming that you have to take a fresh position, or just so that our viewers perhaps can get a sense of whether or not the decisions that they have made are in the right direction. Harsh and Mohit, both of you, would you be able to give us an idea as to what you like in the space? Assuming as an investor that I have decided today that I need to have a certain allocation towards small caps. Harsh, according to you, what's the best option? If you can name a few funds, that would be really useful.
So, Alex, as I said earlier, that my pick would be probably a multi-cap fund to get closest, to selecting good mid-caps, to enable a fund manager select good small caps, cherry pick, rather than giving the 100% mandate to saying that it's a pure small cap fund. Now, you need to, yes, have mid caps and small caps also in your portfolio, because there is where you will get the alpha and, the wealth creation thing over a longer period of time. So because a small cap, the growth potential to become a mid cap, and mid cap to become a large cap, and large cap to grow further. The growth rate will be different as you come down the ladder. So the growth rate for a small cap becoming a mid cap will be faster than, of course, large cap. Now, what should an investor do? Well, I'll categorize investors into two categories. The first one being somebody who's allocated a large sum of money or has allocation to small cap in a pure small cap fund. So what he or she could do is, of course, go back to the drawing board, look at the valuation changes because of the market. The small caps doing extremely well in the last 1 year, and rebalance the portfolio. It's a good time to rebalance. You must be experiencing high gains in your small cap allocation. So you could probably redeem some out of there and put it into a large or a mid cap. Just rebalance your equity allocation. For those investors who have just got into small caps and they have no clue about asset allocation, but they've got into small cap only purely looking at past returns, I think the market is giving them a time to correct their mistakes without a penalty. So, if the markets fall and then they realize this is not where they wanted to be, this is a good time because they will correct their mistakes without incurring any losses. So if you're, if you've entered into small caps purely and purely based on past returns, you don't understand what a small cap is, you don't know the companies that figure into the small cap category, this is a good time for you to redeem out of and move to another, go back into your asset allocation, look how much you want to go into large cap, mid caps, and just make the changes in your portfolio.
All right. Mohit, any names that you want to suggest, and do you want to add to the strategy that Harsh has just described?
Alex, I'm in the opposite side of the camp, to be very honest. We have been aggressively getting our clients into small cap space for last 1 year now. And I think an allocation is warranted in each portfolio, depending on the risk profile, obviously, right? So we continue to build that 10 to 20% allocation in equity portfolios on the small cap front. Look, I think my favorite picks were always Tata and Blue ICICI small cap. Now Tata having closed lump sum, we continue to follow SIP, STP approach out there. I like these two funds predominantly because of the manageable AUM corpus, right? There's nothing wrong with other small cap funds. Honestly, everyone has given superlative returns, and it's very difficult to cherry pick between the lot right now because the markets are good and the tide is in favor. But predominantly, and I'll again repeat, because of the sheer AUM, which is manageable, I like these two strategies. On the passive front, we have been aggressively building allocations for all our clients, whether it be large cap, mid cap, or small cap. And out there, I think the two options which we've frequently considered are Nippon and Motilal Oswal small cap 250 index funds. So I like all these four in any portfolio.
So, and just a point, gentlemen, and this is something that my viewers will know about because they've watched the first part of this conversation. Tata has said, or rather the fund manager has said, that the pause in lump sum is temporary. It's a strategic call. As they feel they have the leg room to stretch, they will open it up again. But gentlemen, thank you so much for joining in and for giving us that perspective. Really important conversation today, and pleasure speaking with you.
Thank you.
Viewers, there you have it. That's the strategy that you need to employ on the small cap side of things. Let us know what you think in the comment section, and don't forget to share and follow BQ Prime for a lot more.